You were listening to ChartingWealth.com's comprehensive review and forecast for the week beginning Monday, the 5th of December, 2016. Markets are continuing to move up after a couple of days of some down movements. We saw on Friday the market recover and continue its upward movement. Let's look at the weekly charts to begin with. And for those of you who've been joining us over many months, we are now going to combine on the weekends as we prepare for Monday, both our Monday daily and our weekly, into a comprehensive review that encapsulates both what's going on overall and broad and our two-day charts like we do on a daily basis. So let's look at the weekly first. What do we see going? Well, the weekly crossed over, going up back on the week ending the 25th of November. The movement has continued up for the week ending the 2nd of December. However, if you look at the top of the charts, you can see that the market's really topped off about where it was in the prior week. However, we do continue to have upward movement as far as we're staying above our two-day trend line. We just didn't have as much movement over the past week upward, but it did end up closing out about where it previously had been. We've seen the derivative oscillator continue to grow in its intensity, and the old MACD, what we call now the PPO, the price percent oscillator, which is the only indicator that we really rely on, that one has continued to move up. Our two-day trend line continues to move up. The market is not above it as it was before, and just for those of you following us doing your daily market worksheet, go ahead and put that your weekly indicator for the total market, IYY, is in an upward position. Now let's look quickly at the two-day chart. What have we seen it do over the course of the last week? Well, we have seen the market, like we could see on the weekly, pretty much slide sideways. In fact, a little bit down, actually. We have crossed over the two-day trend line, and we have closed above the weekly trend line. Now again, we're looking at a two-day chart at this point, even though the market was up on Friday 0.05%. Our two-day chart actually shows the real down movement. Now we use Heikin-Ashi candlesticks. The reason we like them is because Heikin-Ashi means average pace in Japanese, and we can see the average pace of the market falling off, particularly on our two-day chart. We see that our derivative oscillator has lost a great deal of energy since it topped out on the 23rd of November. And we see that the PPO is moving sideways, and that could, of course, if it keeps moving in that direction, will be a crossover going down in the not too distant future. So if we look at how things occurred on Friday intraday, or we sort of look how about over the last week, we look at where things have gone, we can see that the total market has slid sideways up until about the 30th or so of November, and since then it's actually launched down. Again, still above below the two-day trend line, still above the weekly trend line, but the market does have a great deal of short-term downward momentum. Still moving up on the weekly chart, but broken through the two-day trend line. So we will continue to watch. If we have a recovery take place and the 4-hour chart start moving up again, then hopefully we'll see things turn over. But we just need to be aware as we look at everything. We still, on the two-day chart, confirmed up moves, still confirmed up moves on the weekly. We want to see if indeed this pullback ends, the 4-hour chart starts moving up, crossing over. Then you can jump in and maybe ride some more of this for the Santa Claus, the Christmas effect. We'll see if indeed that occurs. Now, let's go back to our weekly chart. Let's take a look at the S&P 500. It was up just like the total market, 0.05% for the day. We look at the weekly chart, looks very similar to the total market. The S&P 500 pretty much topped out over the last 2 weeks at the same spot, started and ended above the weekly trend line, and we see that we had the crossover just the same on the 25th going up on the weekly chart. So go ahead and mark for this next week on your daily market worksheets. The S&P 500 still in a confirmed uptrend. If we look at the two-day chart, we see that the week started off moving up and then started sliding sideways and then down toward the end of the week. It's breached the 2-day trend line. However, we're still in a confirmed up move on the PPO, although the derivative oscillator is losing energy. If we look intraday on the 4-hour chart, what do we see? Again, the market sliding sideways, started moving over down on the 30th and pretty much continued down. So we have that pullback occurring. If the 4-hour chart crosses back over, going up as it did on the 7th, back on the 7th of November, with the kind of patterns we have here, the weekly chart in an up move, the 2-day chart in an up move, then of course you would use this 4-hour chart as your trigger chart to jump into an up trade. That may not occur, but if it does, be ready for that over the course of this next week. Okay, back to the weekly chart. And I really like the new way we're doing this. I hope you like it. I think this is a better, comprehensive way to look at what's going on in the market. Now, what's going on the weekly chart for the Qs, the Nasdaq 100? Confirmed down move since the market crossed over, going down on the Nasdaq 100 back on the 21st of October. Slid sideways, down a little bit on the week ending the 4th of November, and then sideways up a little on the week ending the 25th of November, and then a huge doji for the week that just ended on the 2nd of December. What does a doji mean? Well, a doji means the market opened and closed about where it had, well, it opened and closed at about the same spot. But lots of up movement, lots of down movement, lots of volatility. But when you see a cross or a doji, means that there's lots of indecision. We can see that derivative oscillator is still negative. Actually, looks like the derivative oscillator got a little bit more downward momentum, just barely, over the course of this past week. It had lost some on the week of the 25th, but gained just a tiny fraction. The PPO actually has kinked over going down, so stronger downward momentum there. And we don't have much of a trend line. Tried to draw a new one, but I don't like drawing a trend line on a green open box candle down, but it's about all I could do to give us something. So we did that. Now let's look at what's going on the 2-day chart. We saw throughout the course of the week, beginning on the 28th, up movement on the 2-day candle, the 2-day candle ending on the 28th, some up movement there. We had a doji on the 2-day candle ending on the 30th of November, and then the 2-day candle ending on the 2nd of December. Strong down movement, actually a crossover going down on the 2-day chart. What makes this good for us? Well, it's because it's good in the fact that now the 2-day chart parallels the down movement in the weekly chart, which is what we like to see. Soon as we get another candle that finishes off, we'll try to draw ourselves a decent trend line now that we have a crossover going down on the 2-day chart. Now let's look at the 4-hour chart, see what we see over the course of the week. And of course, we can see that the market slid over, moving down starting on, well, Monday. The chart slid sideways up a little bit on Tuesday, and then Wednesday and Thursday and the morning on Friday, strong down movement. And like we said, we have that crossover now on the 2-day chart going down. So we would wait for a pullback, that is a movement up, before we would get into any QID, which is an inverse fund that allows you to make money when the Nasdaq 100 goes down. So that is where we are with our 3 indexes as we end the week. Now again, the Qs was up 0.20% for the day, but the momentum on the Qs is still going down. So pay attention to that. Let's just see what happens. If we have a pullback and then a move further down, you might have a good jumping in point. So that's where we are. A little bit of struggles in the market. It is toward the end of the year. We've just had a presidential election. Let's just watch. And if we find good trades, we will practice them, won't we? Okay, lastly, we're going to go back to our weekly chart. And again, be sure to mark the Qs down on your daily market worksheet on the weekly chart. Now we're going to go to gold, which was up 0.54% for the day. Again, remember, gold confirmed down move, actually crossed over all the way back on the 12th of August, going down. Gold rocketing down strong, 3 strong weekly candles moving down. Gold's in a confirmed down move. Mark that on your daily market worksheet. If we track back a little bit to the 2-day chart from the weekly, we see that we've got a nice strong trend line going down on gold. Derivative oscillators lost some of its downward momentum, but the PPO is pretty much the same, continuing to trek down. Now, if we look intraday during the week on the 4-hour chart, what do we see going on starting on Monday, the 28th of November? We see the market was up that day, down some the following day on Tuesday, down strong on Wednesday and in the morning on Thursday, and then up in the afternoon. We're seeing that familiar pattern we saw last year on the 4-hour chart that had been such a great chart for us until about this time last year. And then what happened? Gold sort of got screwy. Our PPO, or back then the MACD, stopped working for us because gold was sliding sideways so much it didn't work very well. And we see that happening right now. What happens when a chart doesn't work for you anymore? You stop using it. Now we found it started working again. If you remember, those been with us a long time. Once the year progressed again, got into late January, February, all of a sudden that 4-hour chart started working. Well, it's not working now, but go ahead, mark gold in a confirmed down move still on that weekly chart. Now, we're going to go back to something that all of you are familiar with, and that is talking about the weekend review. That is our review of what happened, the news that may have moved the market over the next week, last week, and then what might be moving the market over the coming week. Well, U.S. labor maintained the expected trajectory. The U.S. economy added 178,000 new jobs in November. This was completely in line with what we expected. And we saw the unemployment rate drop to 4.6. And folks, that's nearly the lowest in a decade. However, what we did see is our hourly earnings were disappointing in November. And economists had expected earnings to actually rise, and they did not rise at the level they expected. Earlier in the week, the U.S. reported upwardly revised gross domestic product figures for the third quarter. GDP was revised at an annual growth of just over 3% at 3.2%, while after-tax corporate earnings had advanced at a robust rate at over 5%. And this is the first rise since the election. And what happened to bond yields? Well, they were significantly higher in the past several weeks. So we'll continue to see how the economy recovers. Global manufacturing sectors rebounded strongly. They made a showing of broad global turn for the better in recent months, and that is quite nice. The November data showed sizable gains. We saw PMIs in both the U.S., China, and the Eurozone, additionally, in all of them exceeding forecasts. So that is nice to see. Don't forget, over the weekend, the Italians and the Austrians are going to head to the polls. A lot of anti-establishment. You know, the Brits started it with the Brexit. The Americans continued with the Trump election. Now we'll see what the Italians and the Austrians do. And on the energy front, we see that OPEC has finally agreed on production cuts in Vienna. We'll see how that ends up playing out as far as energy and fuel costs go. The market also is probably going to be pretty happy with the nomination of Steven Mnuchin as the new Treasury Secretary. Of course, this fella is a former hedge fund manager, former Goldman Sachs executive. And of course, what's he talking about? Reducing regulations, tax reform, all those are high on his agenda, just like Donald Trump, the president-elect, promised. And we'll see if the European economy is going to still be on the mend. They're looking to gain momentum over there as unemployment in the Eurozone fell below 10% for the first time in 7 years in the past week. So we'll see if they'll be able to get their act together. Also, U.S. house price index recovered some lost ground. So, you know, some good news actually coming in. And of course, the market reflected some of that, but for the most part, the week, was pretty weak. W-E-E-K, as far as the week goes, was pretty W-E-A-K. Now let's talk about what's happening in this next week that we're going into in December. Well, like I said earlier, we're going to see a constitutional reform amendment referendum on the ballot in Italy. There's also going to be a big vote in Austria over the weekend. We're then going to see, and in fact in Austria, that's presidential elections that are going to be happening. Both those things will be occurring on Sunday the 4th. Then we'll see on Monday, service sector PMIs are going to be released. We're going to see on Wednesday two things happening. Japan's going to report its Q3, its third quarter GDP, gross domestic product, will be out. And we're going to also see the United Kingdom's going to release its third quarter GDP. And then on Thursday, the European Central Bank Governing Council is going to meet to set rates. No big news from the Fed. Of course, that's coming a little later in the month, and that may be what the market is sort of holding off to see how it's going to react to those rate hikes that are expected. And how much will those rate hikes be? I can pretty much assure you not very much if they do vote for them, as I think they will. I think the market's already priced that in. So where are we as we look at these markets? Just remember, we have confirmed down moves on our weekly charts for the total market. We are confirmed on the total market, on the weekly chart, we are confirmed up. Forgive me, I had gold pulled up there to begin with. We're confirmed up on our weekly chart. We're confirmed up on our weekly chart for the SPY. And we are confirmed down on our weekly chart for the Nasdaq 100, the QQQ. And remember, gold is also confirmed down on the weekly chart. If you don't already have our daily market worksheet, my friends, you need that. If you want to supercharge learning how to read these charts and becoming a charting master, which is basically like giving yourself the best gift you can give you, which is having your own printing press. I mean, just imagine if somebody gave you the Wall Street Journal a week in advance and you could go in there and figure out which way the market's moving. Can you do that all the time? No, but you don't have to. The way that we teach, the way that we work is we want to, first and foremost, preserve your capital. Second, you then want to make money off your capital by being totally flexible and waiting for the perfect circumstances, as perfect as the market can give it to you, to set up. And then and only then do you enter into a trade. Now, we're not a stock calling service. We're an education firm. We want you to set up on an online brokerage account a virtual trading platform. All of them have them. You can become a virtual millionaire in about 5 minutes online, setting yourself up a free account. And then you practice with us by watching these charts, filling out your daily market worksheet every day. There's something magical about taking pen to paper as you listen to our broadcast, write all of it down, and then have it to look back at, where you can do your forecast, you can see what it is you wrote, what you thought was going to happen, and then what happened. And as you get good at this, and as your knowledge increases, and as you get better and better at forecasting what's going to happen, and you learn over time how this works, my friends, what better gift could you give yourself? And let me tell you, nobody can give this to you. You can only earn it. And you earn it 10 minutes a day, listening to our podcast, working on this. You guys have made us as high as number 6 in the world on stock market podcasts, and we appreciate that. If you've not already gone to iTunes and helped us do that, please do so. Go to iTunes, subscribe to our podcast, give us a 5-star rating, say something nice about us. The more of you that listen to us there, the higher we can go in the rankings, and we very much appreciate the help with those metrics. Also, go to our YouTube channel, sign up for our YouTube channel, subscribe there. That also helps us. And go to our website and get our daily market podcast. We'll email it to you. Email it to you. Just go there and sign up. Plus, you'll get our 3 free gifts. The first is how to read a stock chart video. That'll get you started. The second is the daily market worksheet. And the third is the layout that we use at freestockcharts.com. Thank you so much, folks. God bless you. Let us hear from you. Stick with this. 10 minutes a day is all we ask, except over the weekend. We have this consolidated podcast. It takes a little bit longer, but it's worth every minute you listen. God bless from chartingwealth.com.